What is up guys, my name is Ignas, welcome back to the channel. This year I've started shifting my focus more towards dividend paying names and have been adding those into my portfolio. So today I want to share 5 stocks that I believe are currently undervalued, so it's possible to get them for a cheaper price right now and lock in that higher than usual dividend yield. Since I do believe in diversification very much, all the names I share will be from different market sectors. So first I'll share what the name is and how the stock has been performing, then we'll use my dividend investing watch list to check how much they're undervalued according to their dividend yield histories, and lastly I'll share my own position in those names if I bought any. Let's see if we are sharing any of the bullishness in those names. So with that out of the way, let's start. The first name that I would like to bring up is Tyson Foods, ticker symbol TSN. That is a company from the food industry and consumer staples sector. On the year to date they are now up higher for 3.37%. In 1 year the stock had an increase of 19.86%, and in the last 5 years they have been doing decently, where the stock saw an increase of 46.01%. But why do I think there is opportunity in TSN stock right now? To answer that question, we need to go into my dividend investing watch list. So we are in Google Sheets and this is the tab for Tyson Foods. Here we have the company's dividend yield history of the last 5 years, and out of this information we can calculate that in the last 5 years on average the dividend yield was at 1.89%. Now we are able to compare this average to the percentage that we saw in those last 5 years. So the worst time to get in was back in 2017, where the dividend yield was at 1.11%, 41.36% lower than the 5-year average. Then in 2018 it went up to 1.8%, just 4.91% under average. Then in 2019 it got worse again, with the yield going down to 1.24%, 34.49% under the 5-year average. Then the best time to get in was in 2020, with the dividend yield going up to 2.65%, 40% over the 5-year average. It got a bit lower in 2021, with 2.21% in dividends, that was 16.75% over average, and currently with the yield of 2.02%, it is higher than the 5-year average yield for 6.72%. This means that buying the stock right now, we are locking in a dividend yield percentage that is almost 7% higher than it was in the last 5 years. Now we can open my Revolut portfolio tracker, and I have added into Tyson Foods last week on April 1st. So I got 2.2 of a share and paid $201.10, meaning that my average buying price is at $90.74, pretty much where the market is trading right now. If you would like to check into my positions further, there is a link for this Google Sheets document available at the top of the description. Also, if you would be interested in using this tracker for yourself, you are able to do just that by going to File and make a copy. Then you can edit the positions to your picks and track your progress in your own document. The second name I want to share is Citigroup, ticker symbol C. It is a large bank name from the financial sector. Unfortunately, the stock hasn't been doing as well as Tyson Foods. This year it's down for 22.18%. In exactly 1 year it is even worse, with the share price moving lower for 42.45%, and not that better in 5 years, where the stock went lower for 17.47%. But I am bringing up Citigroup because I do believe there is opportunity, at least with their dividend yield. So we are back into my watch list, and it turns out that on average in the last 5 years Citigroup's dividend yield was at 2.62%. So the worst time to get in was back in 2017, where the dividend yield was at 1.07%, 59.12% under average. Then in 2018 it was already over 2% at 2.42, 11.35% under average. Then in 2019 it was almost at the average at 2.6%, 0.66% under average. The best time to get in was by the end of 2020, where the dividend yield was at 4.84%, almost double than the average, higher for 84.93%. Then it got way lower in 2021, bottoming at 2.83%, so 8.14% over average. And this year, with the price going lower, we now have the dividend yield at 4.04%, which is way above the average, higher for 54.37%. So if we do believe that the dividend is safe, and I have looked into it previously, you can check my earlier video on that. This means that buying right now, we would be locking in a dividend yield of over 4% and 50% higher than it has on average been in the last 5 years. Now I am holding a position in Citigroup. I started it last year in July, but I did increase on it this year too. So I'm now holding just over 3 shares at an average price per share of $62.94. Unfortunately, with the current price of $49.52, I am now down $42.65 on the position, which is minus 21.33%. But I am buying in for the dividend, and currently my position in Citigroup is bringing $6.48 on an annual basis. So I'm not getting the full benefit of over 4% in the dividend yield since I bought the stock a bit higher, so my yield on cost is now at 3.24%. Third name I want to bring up is Walgreens Boots Alliance, ticker symbol WBA. It's a retail pharmacy chain, but it's considered as a pharmaceutical company from the healthcare sector. This year the stock has been moving lower. On the year to date it is down for 16.78%. In 1 year that is a bit worse, lower for 20.56%, and last 5 years doesn't increase confidence, as the stock went down for 46.37%. But this move lower really makes the increased dividend yield very appealing right now. So we are in the watch list, and this is the tab for Walgreens, and out of its dividend yield history, we can find that on average in 5 years the dividend yield was at 3.21%. So the worst time to get in was back in 2017, where the dividend yield was at 1.79%, 44.17% under the 5-year average. Then in 2018 it went to the highs of 2.4%, 25.14% under average. In 2019 it went over the average at 3.44%, 7.29% over average. Best time to get in was by the end of 2020, where the yield went up to 4.78%, 49.09% over the 5-year average. Then in 2021 it dropped to the lows of 3.39%, which was 5.73% over average, but after that the price kept going lower, and now we have the dividend yield at 4.41%, which is 34.43% over the 5-year average yield. So there was a better buying opportunity for the majority of 2020, but still buying right now, we are getting a dividend yield of over 4%, and that is 34% higher than it has on average been in 5 years. Quite a decent opportunity to get in, and I recently did just that on April 1st, where I started a position in Walgreens with 4.6 of a share. I paid just over $200, which makes the buying price at $43.56 per share. Now the price did increase after buying, so I'm up for $5.13, and that is an increase of 2.55%. But my focus here was the dividend, so my yield on cost is now at 4.48%, and I'm now receiving $8.82 on an annual basis holding Walgreens. Fourth name I want to bring up is ASML Holding, ticker symbol ASML. It is a semiconductor equipment manufacturing company from the technology sector. 2022 wasn't kind for the name, as it is down for 22.48%. That's a bit better in 1 year, as we only saw a decrease of 1.44%, but in the last 5 years it did really well, as the shares went higher for 371.25%. But even with this huge increase in the share price, there is still some opportunity available with the dividend yield. So we're back to my watch list on Google Sheets, and out of the dividend yield history, in 5 years on average ASML had a dividend yield of 0.86%. So in 2017 the yield was at around 1%, 15.63% over average. Then in 2018 it went just a bit lower to 0.88%, still 2.78% over average. The best time to get in was in 2019, where the dividend yield was at 1.28%, 49.5% over 5-year average. Then the price surged by the end of 2020, where we had the dividend yield at 0.5%, 41.6% under the average, and the yield bottomed in 2021 at 0.49%, so 42.77% under the 5-year average. But this year, with the price going lower, we now have the yield at 0.94%, which is 9.79% over the 5-year average. So in the last 5 years, we didn't have many opportunities to get into the stock at a dividend yield closer to 1%, other than that jump in the beginning of 2019. But last year was the worst, with the dividend yield way under average, so now having it almost 10% over doesn't sound like the worst place to start a position. The fifth name I want to bring up is StarBUX, ticker symbol SBUX. It is the world's largest coffee house chain from the consumer discretionary sector. This year the stock has been doing very poorly, as it is is down over 30% on the year to date. In 1 year it is lower for 27.88%, but in the last 5 years it did went up, higher for 40.69%. It wasn't that much of an opportunity last year, but the price now went lower to the pre-pandemic levels, and I think there is quite an opportunity with the dividend yield. Let's check the watch list, and we have SBUX tab. So from the dividend yield history of the last 5 years, we can find that on average in 5 years the dividend yield was at 1.79%. So back in 2017 the yield was at 1.55%, which is 13.55% under average. Then there was the spike in 2018 where the yield was at 2.42%, 34.98% higher than the 5-year average. Then in 2019 we had it bottoming at 1.14%, 46.97% under average. It went back higher in 2020 with the yield at 2.15%, 19.92% over average. Then with the price moving higher in 2021, the yield went lower to 1.54%, 14.1% under the 5-year average. And this year, with the stock selling off, it is now trading at a dividend yield of 2.35%, that is 41.08% higher than the average. So there hasn't been that many times in the last 5 years where the stock was trading at a yield of over 2%. There was an opportunity in 2018 and then a smaller one in 2020. But now with the yield 30% higher than the 5-year average, I do think there is an interesting opportunity to get into the stock for it right now. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. I shared my 5 undervalued dividend names. Are you holding any of those in your own stock portfolio? Share the picks that you are buying in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share the Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on one dividend paying company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.